Hello there, Life Insurance Rockstar here. Today we are going to answer your questions live about life insurance. Term life insurance, whole life insurance, universal life insurance, variable life insurance, index universal life insurance. Basically, any question you have about life insurance, I'm going to answer for you today. I know, very exciting. Life insurance is one of those things that is so misunderstood that it amazes me. And when I talk to people and they ask questions, I always stop and I think, my gosh, this is really information that you didn't have. This is not information that is in the general knowledge. Let me give you a silly example. Most people think with life insurance, basically, you buy a policy. If you die, your beneficiary gets paid, period, the end. And that is a very small part of what life insurance is about, a very small part. As a matter of fact, life insurance is used in many other ways, one of them being for an investment. I'll give you an example. It is used as an investment tool so frequently that the IRS has specific guidelines in place for what you're allowed to do with a life insurance policy and what you're not, for how much money you can put into it in proportion to the type of policy and the premium, and how much you can't. The IRS does this because they know how useful it can be as an investment tool and also as a tax shelter, as a tax deferring property, many different things. Today, however, the main question seems to be, what's better, term life insurance or whole life insurance? Let me change and correct some terminology fallacies, first of all. It's not actually term life insurance or whole life insurance. It's actually temporary life insurance or permanent life insurance. Term life insurance is the most common type of temporary life insurance. It's called term because it runs for a particular term or a period of time. Whole life insurance or universal life insurance, for example, are what are considered permanent policies. They're considered permanent policies because they don't have a specific fixed expiration date. They can be forecasted as to when they will expire. However, they don't have an expiration date per se on day one of the policy. Does that make sense? Let's talk about term insurance, since that's the easiest, most purchased type of policy. You want life insurance. You want to see what the least expensive ways to get life insurance. Most people will look to term life insurance. Term life insurance will give you life insurance for a fixed period of time. Let's take a policy for, say, $500,000, and let's say that policy is going to be for a 40-year-old. $500,000 for a 40-year-old. Then the next question is, how long are they going to keep that policy? How long is that policy going to stay in force? Let's say 30 years. So we have our 40-year-old. And this 40-year-old has a policy that's going to last him for 30 years. So from age 40 to 70, he has a $500,000 policy. And let's just say he has to pay $1,000 a year. So for 30 years, he pays $1,000. So over 30, how much? $30,000. For that $30,000, he has had the benefit of knowing that if he dies, $500,000 gets paid out to his specified beneficiary. Simple enough, right? Let's make it a little more interesting. Let's say that this individual says, well, that works, that's okay. However, what happens if after 30 years, I still want the policy? Now I'm 70 years old and I'm really thinking about life insurance now. I'm 70. What happens? Can I keep it? The answer is maybe. It depends on the product. It depends on the policy and how it was written. What happens at your age 70 is the term expires. When the term expires, that means that the premium guarantee that you had, that level $1,000 in this example, is over. What normally happens, and again, I'm speaking in generalities, the policy will then turn into what's called an annual renewing term policy, which means the insurance company will say, you're 70 years old, here's the price for the $500,000 in life insurance. Next year, you'll be 71. We'll calculate the price then. And then next year, you'll be 72. We'll calculate the price then. What it turns into is very unaffordable life insurance. Basically, he would be self-funding for all intents and purposes. the life insurance policy. So term life insurance is really only good during the term that is specified. If you want to have life insurance that goes beyond the term, then you would need to buy permanent life insurance. In our example, let's say this 40-year-old said at his age 30, I'm going to buy permanent life insurance. Now, there are many flavors, many varieties, many options for permanent life insurance, but let's just pick a simple one. Let's pick a whole life insurance policy. Now, instead of the $1,000 in premium, let's say it's double. Let's say it's $2,000. Now this person still has $500,000 in life insurance, and they're paying $2,000 a year. Now what happens? Well, let's just skip forward 10 years instead of the entire 30. After the 10 years have gone by, this individual has, again, $500,000 in life insurance, plus he has a separate cash account in the policy that is growing based on the amount of money he puts in and based on a fixed interest rate that the insurance company has told us at the beginning of the policy when he was 30. So when he was 30 years old, the insurance company said, okay, we're going to pay you X percentage on the policy. And in addition to that, we may even pay you a dividend. A dividend is simply extra money the insurance company is going to be paying you based on how their performance is in general. So they're guaranteeing you interest, and they're saying we'll also give you a dividend, maybe. Either way, there's money that's coming to you. There's money that is yours within the whole life policy. Let's skip forward 20 years. Now this same person is 60 years old. The 60-year-old says, I'm tired of paying $2,000 a year for life insurance. What are my options? Well, option number one is he says, I'm just going to stop paying. And whatever is in that cash account that I have will continue to pay the premium for me. So what happens? Again, we're speaking in general. There would be sufficient cash value, more than likely, that insurance policy would go on for the rest of his life. So he's paid for the insurance for 20 years. However, he's going to have it the rest of his life. That's one option. Another option is he says, I don't even need life insurance anymore. Just give me money. The insurance company would then say, all right, you have X number of dollars that's in your savings account, the portion of this whole life policy. Take it, it's yours. Guess what? The life insurance company is only going to tax you. Actually, they're not going to tax you at all. The IRS is going to tax you only on the amount of money that you take back that is over the amount you've paid in. Does that make sense? So if you're paying $2,000 a year for 20 years, that's $40,000. So the first $40,000 that you're taking out of the whole life insurance policy is tax-free. That's considered a return of premium. It's excellent. The only amount you're going to be taxed on now is that interest that the insurance company was paying and the dividends, if they paid any, on top of it, which makes perfect sense because you're always paid on growth, right? I mean, you're always taxed on growth. That's not unique. What's unique is because this money has been sitting in a life insurance policy, you have not been getting taxed every single year, having to declare the growth every single year, even though the whole life insurance policy has been growing every single year. This is just a very simple example of one way to utilize a whole life insurance policy. There are many, many other ways. There are many, many other options. And there are so many whole life insurance products available. I could do an hour presentation on each one of them, on each concept if I wanted to, and still have plenty to go on. If you have other questions, feel free to let me know. Type it in the comment box. Type it in the comments below. Or if you like, you can go to our webpage at www.lifeinsurance.rocks and send me a message. I'm happy to answer any questions you have. Thanks for watching.